Hey Doc, Sean Duncan with SMD Consulting and Accounting. Today, we're going to dive a little more into this partnership stuff because we just gave a high level on the previous videos. First, disclaimers. Okay, disclaimers are out of the way. All right, when you are a partnership, I described that you have to be either a limited partner or a general partner. But some of you have said, well, wait a second, Sean, I see that there are GPs out there, there are LTDs, there's LPs, there's LLPs, there's even an LLL, 3 Ls, P. What is the deal with all these things? The heartbeat of it is the same rules I just told you, general partner versus limited partner. Now, here's a gotcha that happens with partnerships. Have you ever just entered into an arrangement with somebody and said, yeah, I'm partnering up with so-and-so. We're going to work on this. We're going to do some lab work. We're going to go do some studies. We're going to just kind of partner up on stuff. See, the thing is, when you say the word partner, that has a very specific connotation in the world of business. It means you're partners. Kind of obvious, right? But when you think about how many times we use this term loosely, yeah, we're going to partner up on this thing. That is called holding yourself out. If you and I said, we're going to partner up and we're going to go help these people out with, we're going to go speak at the MGMA together, we're going to partner up and we're going to get paid to speak. We partnered up. See, we told the world that we were in some formal arrangement together because we said the word partner. That, my friends, is a general partnership. You see, just like I had mentioned with sole proprietorships, you can kind of accidentally start a business. You can accidentally start partnerships. And in the absence of good documentation to define otherwise, when we hold ourselves out as partners, we are both general partners by default. You don't even get to elect limited partner status. You don't get the limited liability. You don't get the reduction in taxes. We are paying full taxes and we are both personally liable. Now think about this. We can really like each other a lot. And you could be amazing on stage, and we could be amazing in practice together. Your spouse could work with us, and he's going to be awesome at working as our office manager. However, if your spouse screws up and we're a general partnership, I'm on the hook for your spouse, for the MA, for anybody else that's in the practice. See, general partnerships are bad. I'm just going to say it. They're just a terrible idea. General partnerships, whenever I see a GP, I deem it a mistake because no planning was in place and there's probably not even documentation in place to explain what happens if you decide to dissolve, if somebody gets sued. I don't want you automatically signing up for full personal liability and full taxes. Let's put some structure around this. So keep in mind, word of warning, don't use the word partner anymore, period, unless you are very clear that that person is a partner on paper. And if you are going to use it, document the crud out of it, because we don't need you getting sued for something silly that somebody else did. Now, limited partnerships, that would imply, well, wait a second, Sean, if everybody's a general partner in a general partnership, doesn't that mean everybody's a limited partner in a limited partnership? No. IRS already gets you on this one. In a limited partnership, and typically you're going to see comma LP or comma LTD behind the initials. In the limited partnership, at least someone has to be a general partner. I know, who wants to raise their hands for maximum liability and tax, right? But that's just the way this works. Somebody is running that organization. If you recall, we talked about you making management decisions. If you're making management decisions, you are deemed a general partner. And this is where a lot of medical practitioners get in trouble. They'll say, well, that individual is going to be the general partner. All the rest of it will be limited, but yet you have a board of directors that involves all the rest of you. The IRS is coming after that stuff. They're going, no. Just because you checked a box and said limited partner doesn't mean you get to avoid all the responsibilities and taxes. You're acting like a general partner. So again, proactively managing, how do you get out of this? That's the key. Now, general partnerships, everybody's a general partner. Limited partnerships can have a combination, but somebody must still be at least one general partner, and we know how those rules work. So when you're proactively planning it, take that into consideration and don't accidentally form a partnership. And I'll give you the most common example is you're going to share expenses. I'm going to go back to the general partner thing. I had a couple psychologists and psychiatrists forming an office, and they just wanted to share the office space, and they put their names together on the door of the office space and opened a bank account just so that they can pay the admin and the copier and the rent. That's a general partnership. Well, we didn't file any documents about it. You opened a bank account with that name and you held out to the world that you were Joe and Susie and Bob as a practice, general partnership. Don't do that. If you're unsure, please call your CPA, please call your lawyer just to make sure that this doesn't happen. Because again, I don't want you sued and I don't want you paying more taxes than you have to. Hopefully that helps clarify it. If we need more details, man, keep these questions coming. Love it. Hey, Doc, thanks for coming.